What's going on, Electro Drive News fam? Get ready, because the news cycle is moving at warp speed, and we've got the absolute latest updates that you need to know. The world of innovation and industry never sleeps, and neither do we. We're diving headfirst into a whirlwind of developments that are shaping our future, from groundbreaking financial reports to shifts in major global markets. You're tuning into the most crucial intel, the kind that sets the pace and defines the next big moves. Don't blink because you might miss it. We've got a packed show covering some seriously significant shifts. First up, we're dissecting the latest financial performance from a major player in the electric vehicle space. Did they hit the mark or fall short? Then, we're shifting gears to analyze how the market is reacting to those very numbers, with some surprising movements that have everyone talking. We'll also get into the details of sales figures that are painting a picture of the industry's current health and future trajectory. And finally, we're looking ahead with guidance that could signal a major turning point. It's all here, and it's all happening now. Make sure you're locked in, hit that like button, subscribe if you haven't already, and ring that notification bell so you never miss a beat. Let's get into it. Market roller coaster. This latest earnings report has sent shockwaves through the industry, impacting investor sentiment and stock performance. We're breaking down the numbers that matter. NIO Inc. has once again found itself under the intense scrutiny of the financial world, releasing its Q2 2025 earnings report. The results painted a complex picture for the electric vehicle manufacturer, revealing a continued net loss of $717.7 million, or 32 cents per American Depositary Share, ADS. This figure, while substantial, was marginally wider than the anticipated 31 cents consensus loss. However, the company did report a year-over-year revenue increase of 9%, reaching $2.65 billion, which fell slightly short of the $2.73 billion analysts had projected. This revenue miss, though not dramatic, contributed to a sense of volatility in the market's initial reaction. Despite the headline loss, there were glimmers of operational improvement that caught the attention of keen observers. NIO's vehicle deliveries showed robust year-over-year growth, surging by 25.6% to 72,056 units in the second quarter. This was an even more impressive leap of nearly 71% when compared to the first quarter of 2025, indicating a significant ramp-up in production and sales momentum. This surge in volume is a critical factor for NIO as it strives to achieve greater economies of scale and navigate the highly competitive EV landscape. The company's management highlighted the strong market reception of new models like the ONVO L90 and the NIO all-new EASE 8 as key drivers behind this delivery growth. Furthermore, the company provided guidance for the third quarter of 2025 that offered a degree of optimism. NIO anticipates total deliveries to range between 87,000 and 91,000 vehicles, a projection that signifies a substantial year-on-year increase of 41% to 47%. This forecast, if realized, would set a new company record for quarterly deliveries. Revenue projections for Q3 were set between $3.04 billion and $3.19 billion, representing a year-over-year growth of 16.8% to 22.5%. This forward-looking outlook suggests that NIO is confident in its ability to continue expanding its market presence and increasing sales volume. However, the persistent challenge of margin pressure in the intensely competitive electric vehicle market remains a key concern for investors. While increased sales volume is positive, the ability of these higher sales to translate into sustainable profitability is the critical question that analysts and shareholders will be closely monitoring in the coming quarters. The market's reaction to these results was mixed, with initial jitters giving way to a more nuanced assessment of NIO's progress and challenges. Stay tuned as we unpack the market's immediate reaction to these figures and explore what it means for the wider EV sector. Next, we'll dive into how NIO's stock performed following this announcement and what analysts are saying about its future prospects. Market surge for NIO. Investors are cheering positive signs from NIO's latest earnings, sparking a significant rally in its stock. We're breaking down the optimism. NIO NYSE. NIO experienced a notable surge on Tuesday, with its stock climbing 3.1% to close at $6.58. This upward movement was fueled by the release of the company's second quarter earnings report, which revealed a smaller-than-expected loss of $567 million and an improved operating margin to 10%. These figures represent NIO's strongest financial showing since the fourth quarter of 2023, signaling potential signs of a turnaround and renewed investor confidence. The heightened investor interest was further underscored by a substantial trading volume of 119.6 million shares, which was nearly double the company's average daily volume, indicating significant market engagement with the news. This positive sentiment extended to NIO's peers in the Chinese electric vehicle market. Li Auto Nasdaq (LI) saw its stock advance by 4.5% to close at $24.40, while BYD Company (OTC) BYDDY experienced a 2.9% increase, finishing the day at $14.04. Both companies benefited from the prevailing optimism surrounding the demand for electric vehicles originating from China. This collective strength suggests that broader market trends and consumer appetite for EVs, particularly from Chinese manufacturers, are robust. The optimism surrounding NIO is largely attributed to its impressive delivery figures. The company reported a substantial 26% year-over-year increase in second quarter deliveries, and its August unit sales showed an even more significant 55% rise. This consistent growth in sales volume, combined with the reported improvement in margins and a focus on tighter cost controls, paints a picture of a company on an upward trajectory. Analysts and market watchers are now contemplating the possibility of NIO reaching profitability as early as the fourth quarter of 2025. Such an achievement would position NIO as a standout performer in an EV sector that has been characterized by intense competition and, for many, persistent profitability challenges. While the market reacted positively to these developments, it's important to consider the broader context. The overall markets experienced a dip on Tuesday, with the S&P 500 sliding 0.7% and the Nasdaq Composite falling 0.8%. This suggests that while NIO showed strength, it was navigating a somewhat less favorable macroeconomic environment. Nevertheless, the company's specific performance metrics and forward-looking indicators were strong enough to drive significant positive movement in its stock price. Investors will be closely watching to see if NIO can maintain this momentum and translate its delivery growth and margin improvements into sustained profitability. This positive market reaction sets the stage for a deeper look into how NIO is managing its costs and scaling operations. Up next, we'll examine the specific sales targets and revenue projections NIO has laid out for the coming quarter, and what they mean for its profitability roadmap. NIO sales miss, but outlook offers hope. Despite a slight revenue miss in Q2, NIO's strong delivery growth and positive third quarter outlook are providing a much-needed boost. NIO Inc. NIO shares experienced a downturn in pre-market trading on Tuesday, dipping by 3% following the release of its second quarter 2025 financial results. The electric vehicle maker reported revenue of $2.65 billion, a 9% increase compared to the previous year. However, this figure fell short of the $2.73 billion that Wall Street analysts had forecast, leading to initial investor disappointment. The company also posted an adjusted loss per American Depositary Share, ADS, of 32 cents in Q2 2025, which was slightly worse than the consensus estimate of approximately 31 cents. Despite the revenue shortfall and a slightly wider-than-expected loss, the report did highlight significant positive momentum in vehicle deliveries. NIO achieved a remarkable 72,056 vehicle deliveries in the second quarter, marking a substantial 25.6% increase year-over-year. Even more impressively, this represented a nearly 71% surge compared to the deliveries recorded in the first quarter of 2025. This strong performance in unit sales demonstrates NIO's growing production capacity and its ability to meet increasing consumer demand in a competitive market. Looking ahead, NIO provided an outlook for the third quarter of 2025 that offered a considerable degree of relief and optimism. The company guided for vehicle deliveries to be in the range of 87,000 to 91,000 units. This projection signifies robust year-over-year growth, estimated between 41% and 47%. Such a volume would represent a new record for quarterly deliveries for the company. Revenue for the third quarter is projected to fall between $3.04 billion and $3.19 billion, indicating a healthy year-over-year gain of 16.8% to 22.5%. This strong delivery forecast was particularly welcomed by investors, suggesting that NIO anticipates continued expansion and market penetration. However, the revenue miss in the second quarter served as a stark reminder of the ongoing margin pressures inherent in the highly competitive electric vehicle market. While NIO is successfully increasing its sales volumes, the critical challenge remains converting these higher sales into sustainable profitability. Traders and analysts will be intently focused on whether the anticipated rise in volumes in the coming quarters will translate into improved financial margins and a clearer path to profitability. The market's reaction reflects a balancing act between celebrating delivery growth and scrutinizing the bottom line. This mixed reaction underscores the delicate balance NIO must strike between growth and profitability. We'll now turn our attention to how NIO's guidance for Q3 is being interpreted and what it means for the company's strategic direction. NIO beats expectations with narrowed loss and strong Q3 guidance. NIO's latest earnings report shows a reduced loss thanks to higher sales, with optimistic projections for the upcoming quarter. NIO Inc. NYSE. NIO has reported a narrower adjusted loss for the second quarter of 2025, a positive outcome attributed to an increase in vehicle sales. The China-based electric car maker announced its financial results on Tuesday, alongside an encouraging outlook for the third quarter. This news has been met with cautious optimism by the market as the company navigates the dynamic landscape of the global automotive industry. During the second quarter of fiscal 2025, NIO's revenues saw a healthy increase of 9% year-over-year, reaching a total of $2.65 billion. The primary driver of this revenue growth was vehicle sales, which experienced a modest 2.9% year-over-year increase. While this growth rate might seem conservative, it contributes to the company's overall financial performance and signals a steady demand for its products. The company's ability to grow revenue, even with a competitive market, is a key indicator of its market position. On the profitability front, NIO reported a net loss attributable to NIO shareholders of $717.7 million, or 32 cents per ADS, for the June quarter. However, when adjusted for certain non-recurring or non-cash items, such as share-based compensation expenses, organizational optimization charges, and accretion on redeemable non-controlling interests, the adjusted net loss per ADS improved to 25 cents. This is a notable improvement from the 30 cents loss per ADS reported in the same period last year, indicating progress in managing operational costs and improving efficiency. Looking ahead to the third quarter of 2025, NIO has issued positive guidance that has resonated well with investors. The company expects total revenues to be in the range of $3.045 billion to $3.193 billion. Furthermore, NIO forecasts total vehicle deliveries to be between 87,000 and 91,000 units for Q3. This projection represents a significant year-on-year growth of 40.7% to 47.1%, which, if achieved, would mark a new company record for quarterly deliveries. NIO CEO, William Bin Li, expressed confidence in this outlook, citing the strong market reception of the ONVO L90 and the NIO all-new EASE 8 as key factors driving this anticipated sales momentum. This forward-looking guidance suggests that NIO is optimistic about its ability to capitalize on market demand and operational improvements. The company's focus on expanding its sales volume while simultaneously working to control costs and narrow its losses is a critical strategy for long-term success in the competitive EV sector. Investors will be watching closely to see if NIO can meet or exceed these ambitious targets, which could further solidify its position in the market and pave the way for future profitability. These delivery and revenue targets are crucial for understanding NIO's path to profitability. Now, let's shift gears to see how the market interpreted these results and what the implications are for the broader electric vehicle industry. That's a wrap on a packed show. We saw NIO post a loss but rally on improved margins, then tumble on a sales miss but rebound with strong Q3 delivery forecasts, and finally, a report highlighting a narrowed loss and optimistic outlook. Don't forget to like this video, subscribe to ElectroDrive News for all your essential updates, smash that notification bell, leave a comment with your thoughts, and follow us on all our social channels to stay connected. We'll see you in the next one.